You ready for me? Okay. Hey guys, we're going to go ahead and get started with our February business breakfast. And we're anxious for you all to hear this program. We have made such an effort to make sure that the programs we're putting on are really helpful to our small businesses, small organizations. That, of course, in February, what is more pressing on your minds than your taxes? And if you got a PPP loan or an EIDL loan, making sure that as much as possible is forgiven and how to handle all of that. So that's why Allie decided to book a professional to come in and talk to you about your COVID funds and taxes. So we're happy that all of you are here today. Before I get started, I did want to make just a couple of quick announcements. The first is that if you missed our annual meeting last Friday, we do have printed copies of our annual report as chamber members. This is information that you should be interested in because the chamber belongs to you, our members. So members are welcome to take a copy. It's not for public distribution. It's for you, our members. So if you take a copy, you keep your copy, and please don't distribute it outside other owners like yourselves. The second thing is, who has seen our new magazine? We are so pleased that it arrived last week. And some of you in the room are advertisers. All of you, if you're chamber members, are listed in the directory in the back. It's by category. If your business is a place that can give away copies to newcomers and visitors, and even local folks, because it's all about shop local, supporting local businesses. Just let us know. We have a small number of magazines here. We brought a box which contains about 75 normally, and it was only missing a few. So it probably had 50. So we've got a few to give away today. So you can take 5 or 10 today, and then when you run out, which you will, come back and get 5 or 10 more. We're already getting asked when are we going to print again. So this has been one of those projects that we didn't have the capacity to do in prior years, but because our major events were postponed or canceled, we were able to produce it, and we think that it's a win-win. It's good for you, it was good for us, and we think it'll be good for the community at large. And for our visitors, Judy and Allie will tell you, we get calls and walk-ins every day from people asking for community information. And before the magazine, we would gather up whatever we had on hand, and it was different every time. And now we can give them something that's slick and professional and gives a positive first impression. So thank you for your support, and thank you for helping us get it distributed. I'm going to go ahead and introduce our speaker so that at the end of today, he has time for questions. And then if we go beyond 9 o'clock, I think Adam and Annie will both stick around to answer even more questions if you have something very specific. But be sure at the end, don't hold back. Ask your questions so that the people who are going to watch this online afterwards will hear the questions and the answers. So let me get started with our program. Adam Villarrial is been with A Fairchild PC has been in Midlothian for almost 6 years. They established in Carrollton, and they also have this Midlothian office. There are 22 employees between the two locations. Adam Villarrial, our speaker, has been in Ellis County for about 10 years, and he's going to share with you all about this topic to keep you out of trouble with the federal government. Adam?
Thank you so much for that introduction, Judy. I'm sorry, Laura. What I wanted to say was I want to show just a quick appreciation for you and your team, and that's why I was thinking of Judy and Allie as well. You guys improvised last year like you had to and still delivered. Yeah, you punted along with all of it. But no, you guys, all the while maintaining focus on entrepreneurs and businesses in the chamber and the community, and that shows a lot for you guys. And I think presence in meetings like this and everything you do in the county, in the community, the turnout shows how good of a job you guys are doing. So we appreciate that. I did bring my commanding officer with me today. She tried to plan it as well, but she got drug in. So 8:30 in the morning, and you crazy signed up to talk about tax. That says a lot about this group. We're going to move fast, kind of. We're going to cover a lot. I do want to tell you, if you have reservations of tax, if you're scared of it, just scared the living daylights out of you, you're not alone. Okay, this stuff is extensive. Tax law is thousands of pages long, and poor souls like me read through it to fall asleep, I guess. But you're not alone. Um, I do. You guys, it pays to have a tax professional in your toolbox. You know, if you got a serious illness, you guys go to the doctor. If for heaven forbid you got to go to court, you guys hire a lawyer. I mean, you can go by yourself, but that's not a good idea probably. If you want to make money in America, you got to do this every year: is file a tax return. And it's kind of odd that the IRS allows you to do that on your own without a tax professional. Anybody ever got a notice from the IRS that said, "Hey, we went through your return. You're too patriotic. Here's some money back"? No, because they know they allow you to file on your own. But a tax professional in your toolbox, it very well pays for itself. I can assure you that. So there's my plug there. All right, let's get started. Did you need to add anything? Okay. Economic impact payments. So these, you know, everything hit the fan last April, March. Everything shut down. The government decided, hey, we need to send some money out to our people of America. So this is where they started, was economic impact payments. Then they said, okay, we need to focus on small businesses as well. And so these IRS notices that came out focus on Paycheck Protection Program, PPP for short. Along with that came some economic injury disaster loans. We're going to discuss that, and then some Biden administration tax reform. So we're going to talk about history, what happened last year, a little bit what's going on right now, and then some what ifs in the future to kind of ease your mind a little bit. Okay, economic impact payments. Everybody knows what those are. Here's a little bit of facts about them. The first one, just number-wise, so if you filed non-married filing jointly, so if you're single, had a household, or separate, this is the first round. Remember, first round, about April and May of last year, $1,200, and then $500 for every qualifying child. Now, if you were married filing jointly and you were living happily ever after, you got $2,400 plus again $500 for qualifying child. The second round of economic impact payments that came out in late December, it was kind of when the calendar changed, and even I think they're still getting dispersed now. We got non-married filing joint returns at $600 plus another $600 for each qualified child. Same concept there. And then if you did married filing joint, $1,200 plus $600 every qualified child. Now I know everybody's going to be in a different boat. Some people were lucky enough to get it first go around. Some people got a check. I think they're sending debit cards out. It's just across the board. You know, they're trying to get 60 million payments out. Could you imagine the logistics behind that? It's probably a nightmare. And so we're going to get to talking about if you didn't get a payment. We're going to get both scenarios. If you did get it, what you should do, and if you didn't get it, how you're going to handle that as well. Questions on impact payments? All right. As we're going along, please absolutely raise your hands, and I'll be happy to answer. New tax law. We got a new form. We have to prepare and file now. Recovery rebate credit. It's a new term coming out along with this economic impact payment. It's a credit against your 2020 income tax return. Individuals who receive the full amounts of both economic impact payments do not need to complete any information about what we just discussed, recovery rebate. Okay, in a scenario where eligible individuals did not receive the full amounts, this is where you make up for it essentially on your 2020 tax return. Well, how do you know if you did receive the full amounts or not? Well, again, I gave you the numbers that you should have received. In a scenario where you had 4 children and you didn't receive those extra funds for the qualified child, where your 2020 1040 is where that's going to be made up on, either in a form of a credit, which lowers your tax liability. So if you had tax due, you didn't get the full amount, this would kick in, lower your tax liability. If you didn't have a tax liability, it was actually zero and you're already getting a refund and you still didn't get what you were supposed to on these economic impact payments, then it adds to that refund. So this is done on your 2020 1040. Now again, this is new law, new tax code, new everything. Tax professionals is probably the way to go for stuff that you're going to be adding on your tax return this year. It's not the same old TurboTax over and over and over. We're adding new stuff here. So it could pay it for itself to try and get someone to help you out there. Questions? Let's see, the second economic impact payment. IRS.gov has revamped their website. It's very user friendly now. They give you basically a lot of frequently asked questions, trying to answer all the questions that a taxpayer would have on certain topics. The second economic impact, the one that's going on right now, they have a good extensive frequently asked question list there. If I don't answer anything, you can go to that website and hopefully that website will. Chances are you could have received a letter, and on that letter, it's just not everybody freaks out when they get an IRS letter, right? Not all of them are that bad, or just notices. If you did get one of these, chances are it was sent erroneously, and you can ignore it. And then the other letter that may have came, which I have yet to see one, it's a notice 1444, that's for the first round, and then 1444B, because they're geniuses at the government level. Those basically would just say, hey, we sent you $1,200, or we sent you $2,400 plus $500 or $600 for qualifying children. Yes, ma'am.
If I log on to IRS.gov, can I put in my social and see what they sent me?
So Laura's question was, could she, this is for people her question was, if she logged on to the website, irs.gov, could she basically see an account record of what's going on for her account? And that is yes. Some are successful doing it and some are not. It's the irs.gov, so good luck. But I would have your pertinent information with you while you're doing that. Obviously you should know your birthday, social, and any other, maybe a prior tax return if you need it. I think you do. Yeah, in your last year's AGI. Good question though. And then there's been some talks, rumbles on Capitol Hill about maybe a third economic impact payment to be dispersed later this year. There's a lot going on right now, obviously, with changeover and changes in administration. We're going to talk on that a little bit about some what ifs. But again, if you had a tax professional in your corner, chances are you should have been told, some of this stuff and all this stuff we're about to talk about. I'm going to pass this off. Now we're going to transition to PPP.
Good morning. So good to be here. So, and also because the government just passed that last law late December, we can't file returns quite yet. It's another week or two delay before a 1040 can be filed. They had to create a new form or change that form because these new economic payments were out there. So nothing can be done. The forms are not quite ready yet. But I hope every business in here went out and got the first round of PPP. Did you get that? I hope you did. If you did get the first round of PPP and you've not filed for forgiveness, you probably want to go ahead and get that done. That second round of PPP, when that law came out in late December, it was over 5,000 pages. It was a little much for us to digest. Usually we try to get out the information to our clients within 2 to 3 days. This one took me more like, how long did it take me? About 9 or 10 days to get it out because it was just so much. Just one little tiny part of the law that was over 5,000 pages. But the second round of PPP, if you've not heard about this, then this is good news for you if you qualify. So if you had a drop of 25% from one quarter to the next, from 19 to 20. So if you had a drop of 25%, then you need to go get more money in that second round of PPP. If you are in the hotel or restaurant business, then you'll get more than you did the first time around. So, but nonprofits can get this. If your contributions dropped from this year, from last year, then go get that money. It is there for you. And I would encourage you to like go and apply today. Don't wait, because that money I think will run out. If you are what's called a shuttered venue, you know what? I didn't look this morning, Adam. Anybody that's in the shuttered venue, and that would be like if you're in any kind of entertainment, a movie theater, live performances, some things like that, then you could actually a significant amount more. But as of just last week, they had not opened up the application for that. I'm thinking they were wanting people to get this PPP. But before you can file for that second round of PPP, you've got to have the first one either already forgiven or you have to have already your application in. So make sure you get the application in and then go that second round of PPP. Does anybody have questions on the PPP? I didn't want to spend too much time on it because it's been around for a little bit. And just to reiterate what we have on there, that income is not includable. You can deduct the expenses. And the third thing is it increases your basis, which I was so excited about. We had talked internally with our staff like, oh my gosh, we're going to have basis issues. And so basis issues would mean if you took out more than what you kind of could, then you would just be double taxed, or you'd have a tax on a dividend or something else like that. So we were very excited when they said it increased the basis issues as well. So really good things came out in that December law that was passed at 5,000 pages. And this is the same for second round. So the second round also, the income is not includable, the expenses are deductible, and the income doesn't increase basis. And the second round will be forgiven. It will be forgiven as long as you apply at least 60% to payroll and 40% to multiple other things. We can talk to you specifically about that if you need help. But it's the same rules. The forgiven rules are the same rules as the first time around. If you are in the hotel though or restaurant business, you get 3.5 times your payroll as if you're not, you get the exact same amount that you got the first time. The other thing that is just really good and exciting, we weren't able to have any carrybacks if you had a net operating loss. So if on your if in your business you did go negative this year, and I'm very sorry if that happened, but you do have some relief. We can go and take that loss back 5 years. Well, 5 years ago, our income tax rate was higher. So the tax brackets were much higher. So we're being able to take people that had a rough year and have a loss this year, go back to 2015 when the rates were higher, and we're getting nice refunds for those people. So yes, they had a loss, but let's take advantage of what the law that we can and help get at least a little bit more cash in our clients' pockets. Oh, I talked about that already. So there's that's just on the screen, talking a little bit more about that second round of PPP. But another thing that's really great in that law was for right now and for next year, all your meals are 100% deductible. So normally they're only 50% deductible, but right now they're 100% for the next 2 years, and that's super exciting. The Congress is saying, go eat out. Go eat out. We need you to eat out. Eating out does a couple things here. Like here in Texas, when we go to the grocery store and buy food, our food is not taxable. So that's great. That's not great for our comptroller, because then if we're buying everything from the grocery store and we're not going out to eat, then our comptroller doesn't get sales tax. And sales tax is the greatest revenue generator for our state. So when we do eat out, we're not only helping that restaurant, which is so awesome, we're also helping the state of Texas get through this. Because you got to think, Texas, we have a great economy. We've been able to get through this really great, yes?
I'm sorry, I didn't mean to interrupt you. Are deductible for both individuals and businesses?
So the meals, good question. So she was asking if the meals are deductible for individuals and businesses. It would only be for businesses. So businesses, if you have a business and you go out to eat, then you can deduct your meals 100%. Normally, meals are only deductible 50%. Right now, they're 100%. I thought that was interesting, though. I was hoping that they would also say that for entertainment, to help get people out there and doing more entertainment. But there was nothing in the new law about entertainment. It was just for meals. And then we do have the paid sick and family leave credits. Those came with the very first law when we all went into this in March. The first law that Congress passed was the Family First Coronavirus Act. And in that, it allowed for some paid sick and family leave credits. Then there's been some changes or updates to that in the multiple other laws that have followed after. But those were supposed to initially expire at the end of the year, and these has been extended. It only extended through March 31st, so I think they think, oh, well, coronavirus is going to be over March 31st. We'll see. We'll see if that changes.
Another SBA resource that came out to help some businesses as well last year. This one can get a little confusing, especially because everything was moving fast, and they kind of just threw this out there quickly. Economic injury disaster loans, or you can see them as EIDL. It actually came in two parts. Part one came as an advance, and then the actual loan came in after. So if you did receive this, chances are you received something small, like $10,000 or less, and then maybe 2-3 weeks later you received the full whatever the EIDL loan was. But that advance, unfortunately, if you didn't get it, it's no longer available. They didn't bring it back out with this second round. So if you missed it, sorry. So if you did get it, here's how you're going to handle it, and here's why you got what you got. It's calculated based on number of employees with the $10,000 max. So if you had more than 10, you got $10,000, and then, like I said, a few weeks later, you probably receive the rest of the EIDL loan. Similarities to the PPP, advance does not have to be repaid. Essentially, that makes it free money. Yes, sir. He caught that. He caught that. So his question was that do I stand behind that statement? Let me keep going real quick, and then I'll circle back to you. Okay. So that 10,000 advance does not have to be paid. There was, when it first came out, it said if you receive the advance plus the PPP loan, there would be some subtractions in there to try to make it right. That went away. They finally came to conclusion and said, hey, that's not right. It's not right for the PPP guys. It's not right for the IDL. So let's just go away with that.
So that just came out in this big 5,000-page law that came across. So if you filled out your PPP forgiveness application before December 27th or 28th, and you subtracted the EIDL out of that, because in that first application there was a place to pull that out because you couldn't take both, you need to go back and get that righted and fixed, because they changed the rules on that. So you do need to do that.
And then, the advance deducted from total loan eligibility. So they did, as far as the loan goes, say you were approved for 150. Well, they went ahead and gave you the 10 up front, and then, like I said, a couple weeks later they gave you the rest, 140. So that is what we're calling the EIDL loan. So again, there's two portions to this. There's an advance, and then there's the actual loan itself. Now, the loan itself does not have the same characteristics as a PPP. This is a legitimate loan, 30-year loan, no prepayment penalties or fees, and your payments are deferred 1 year, which those are probably coming up here, April, May. That 1 year mark is coming. 3.75 fixed for businesses, 2.75 fixed for nonprofits, and this should all have been in some type of closing documents or documents you would have signed to accept this loan. Got to use it for working capital, normal operating expenses, and again, not forgivable, unlike the advance. So, back to your point, the portion that you should only be paying for, I mean, you could have made the payment, this just deferred to 1 year, but you're obviously a great business steward of your money, and you went ahead and started paying. Only that portion should be what you're paying back. If there is a portion of the advance that's in there, I think some conversations probably need to be had. either on you to them to say, hey, this is double check this, or for a tax professional and you to say, hey, it's really not in there. Something needs to be discussed there. Yeah, absolutely.
So we're not bankers. Do we have any bankers in here? A retired banker. Okay. Well, something that's not being covered, and it really upsets me. We're actually having a webinar for our clients on Thursday, tomorrow morning, to talk about this. Right now, the SBA, normally I'm not just a big proponent of SBA loans because there's a lot of fees up front, and then they've got a lot of compliance. But right now, you can go get a loan with the SBA, and a portion of that loan is going to be at a 2.75. And then the bank is going to come in around 4.5. And so you're going to get a blended rate. Your SBA loans are incredible right now. And not only that, a portion of that, the fees are waived. So if you've got any kind of real estate loan or equipment loan or anything like that out there, I'd still go talk to your bank. We bank with First Financial Bank down the street with John Knight. He knows all about the SBA and what's going on here. He's helped connect us with people to talk about what all this is. But I would say go talk to your banker, go refinance right now, because you are going to get a lower rate than you can at any commercial loan. And with a portion of those fees waived, it's like, wow, all of a sudden I went from not real excited about SBA to, oh, everybody needs to go refinance and take advantage of what we have right there.
Moving on. Well, back to you. Sorry. So we covered everything last year, and then what's actually going on right now. And now we're going to get some little foreshadowing here. Again, this is all what ifs. Somebody, he obviously ran a platform that said he would do this, and basically what we're going to say here is this is what he said he was going to do.
Yeah, this comes with planning. And so just yesterday I was talking with a client. We're trying to figure out what to do and how to move money around and whatnot. And we don't know the future. I mean, nothing could happen. But we thought to us, it's really important for planning, because it could mean the difference of thousands of dollars actually if you make decisions now or you may wait to make them later on. And so this is Biden's proposal, what he would kind of like to do and like to see. And sometimes it's like, oh, it's really good, but you got to look at the impact it's having on others, because it might float down to you in a different way. It might float down in higher prices from bigger companies because they're having to pay more tax. So it doesn't impact you directly, but it sure does indirectly through a higher price for a commodity or a good that you're using. So he does plan on, and this is just his wish list. Doesn't mean that he's going to get it, but to raise the highest bracket back from 37 to 39.6. So not only is that raising the highest bracket, likely he would also raise the levels in between. So you would just jump up to the next bracket a little sooner than you did before. It used to be phase out of itemized deductions, and so we've got a couple of nonprofits in here. This is really hard on our nonprofits when they phase out the itemized deductions, because I'd have clients, wealthy clients, call and say, Annie, what if I gave another $50,000? Would that help my tax liability go down? And I have to say, I'm sorry. I would love for you to give $50,000 to your nonprofit, but it's not going to help your tax liability. And unfortunately, a lot of people, then they won't give. They won't give because it's not going to help them with their tax bracket. But when you start phasing that out, it does have an impact on your nonprofits. And so maybe they'll think through that before they phase out those itemized deductions. We've got some like-kind exchanges. So I've got realtors in here, the like-kind exchanges, and how that they might be limiting those. And also this great 20%. Every one of you that's in business should be getting a 20%. I'm kind of shocked that I still see tax returns come in and they're not getting the 20%, or they're not grouping their entities together in a way, or they might have real estate properties and they're not getting the 20% on those real estate properties. It's because there's your CPA, or if you're doing it yourself,
don't know the full law and how we can kind of bring things together and get you that maximum and that full 20% deduction. So would anybody want me to talk a little more on the 20% deduction? Would anybody? So every business starting in 2018 gets depends on your income level in terms of type of service. But if your taxable income, if you're married filing jointly and your taxable income is below $320,000, then you should be getting a 20% deduction on your business. Whether if you're a Schedule C, you're a partnership, or you're an S Corp. If you're a C Corp, come talk to Adam or I. Because if you're a C Corp, you're overpaying taxes. We're switching somebody from a C Corp to an S Corp and doing a whole bunch of other stuff. We're saving that kind of, I think we're estimating like $120,000 or something like that by just moving them around and taking care of them. But go make sure you have a qualified business income deduction on your tax return. But they're thinking about phasing that out for people that make over $400,000. So they're thinking about eliminating the step up in basis for inherited assets. This is so hard. So you've worked really, really hard, or your parents have worked really, really hard for all the assets that you have. They've already paid tax on it once. And so right now, if a family member passes away and you get the money, you inherited it, well, you get a step up in that basis. So let's say they bought stock when it was $10, but now they die, and at the date that they die, it's $100. So if you are the one to inherit that stock, then you get it at $100. So if you sell it today, you get zero capital gains, and you just got $100. Well, they're saying we wouldn't get that. That if you were the person inheriting it, you would still have to have the $10 basis, and so you sell it today, and you would have $90 that you'd have to pay capital gains tax on. So this law, it impacts every single person out there. Even a house. If you have a house and your parents pass away, then as opposed to having the basis of that house at $100,000 and now it's $300,000, and you sell it, that $200,000 right now, you just get to keep and be blessed with it. But they're saying, no, that $200,000 we're going to tax you on. So that would impact people at all levels. They are thinking about bringing the estate tax exemption back to 5.5. So if you are over that, between you and a spouse, that'd be $11 million. You might want to consider gifting some of your assets out right now. Ending the capital gain rate for anyone making over $1 million. So we might have a lot of sales going on this year because people have a lot of land and property that they might want to go ahead and dispose of, or dispose and buy again, or something like that, because they're thinking about doing that. And but he's trying to not raise taxes for anyone making less than $400. But think about my backwards thought. It's likely it's going to impact everybody, even in a different way, or impact you through your inherited. We don't want anybody to die early, but it'd be better to die before that law's passed. Okay. But there's some really great things here too. Like they're thinking, oh, we'd love to increase the child credit to $3,000 or $3,600. Like, oh, that'd be awesome for people that have a lot of families or have children. Expanding that child care credit, increasing the earned income credit, giving a credit for caregivers, giving a credit for people that pay for long-term care insurance. So there's some great things right here. These are great things. These are good things. Yes. I have not studied that relief bill. In that relief bill, I do believe they're trying to push another third round of economic payments in there. I think there's a lot of other stuff. I don't think that's a tax bill, but I'm not 100% sure if that's a tax bill or not. There's some other credit. Go ahead. Other side. Yeah, so that would be very nice. That would be, there's some really nice things in there. It's kind of both. It's kind of a little bit of both. But those are some really nice credits. See, the thing is, if you were doing your own tax return maybe 5 or 10 years ago, the law didn't change all that fast. Right now, the law is changing significantly almost every year. Significantly. Keeping up with the law changes just in 2020 was overwhelming for our staff. I can't imagine just an individual trying to keep up with it. Us trying to keep up in what does it mean and how does it change and how can we impact. And so we study that law, then we share it with our whole entire group so that we can pass that off to our clients. So if this goes again, I mean, look at how many changes are happening. And is software always right? Well, sometimes yes and sometimes no. Even our great software that we use I think, in my opinion, a really Cadillac piece of software. We're still calling them up and saying, guys, this isn't calculating correctly, or we need to change this, or we override to make it know what we need it to be. No. This is just Biden's plan. This is only a plan. Please keep that. This is only his thoughts. Nothing has come into law. It just helps you to think this might be coming down, so maybe we need to make decisions now as opposed to later. I think for this one couple yesterday, we were trying to, where do we move money? Where do we take care of losses? And do we want to go ahead and pay taxes now in 20? They're going to be over the $1 million mark. We're going to go pay taxes now in 20 because in 21, we might have higher rate. Or it could not pass. A lot of times tax law passes in December. I don't know why. That's so rough. And then becomes effective that next year. There's some more credits in there. This was before we had this a little while ago. I think it was only $10,000 now. $15,000 for a first-time home buyer. Oh, so maybe hold off buying that house. If you've got somebody like a Bowery buy a house, it's like, well, if you think this might be coming down the pipeline, if you held off 6 months or a year, you might get a $15,000 credit. So, that's a planning decision. Instead of buying a house right now, maybe wait just a little bit, because that's a really nice credit. Did you have a question? Well, we have the work opportunity. Get more information about people that hire people with disabilities. We do have the work opportunity tax credit, and so some of that might fall into there. But remember, this is just a plan. This is not the law yet. All I'm telling you right now is a plan. I should have put plan up there. So this is not law yet, but it could be what's coming down. So keep in mind when the law comes out, hey, I need to see what's in there. I need to be able, I'm matching up with somebody that's going to be telling us what is the law and know quickly and right away. Yeah, forgiving student loan debt. Oh my God. Yeah, that's a rough one. That would cost that would cost a lot. And then I don't know what my thoughts are on forgiving student loan debt. I mean, great to get your student loan debt forgiven, but then what about all those kids that worked 2 jobs and didn't get a debt and were exhausted, and then you have the kids that went and got debt and partied a lot, and then you're rewarding those. So that one, I struggle. Or everybody that paid their stuff off because they worked really hard as opposed to getting new cars. Yeah, that's a kind of a little struggle for me, but that's kind of what they're thinking. This is big, changing the Social Security limit on payroll. That's going to increase a lot of taxes for people, because you don't just pay your income tax. When you're not in Texas, you pay a state income tax, and then you're paying more payroll tax. So you can think, I'm at 39.6, plus I'm paying an extra 7.6, or extra, like be a 6.2, plus I'm paying my state income tax. And so you've got people paying over 50% of their tax to the government. The carbon. So we're to carbon tax. money drives things. And so there was a lot of money given to like over $11 million from the Green Energy Project given to the Biden or the Democrat campaign. So regardless, we've got both sides, good stuff going on, but you kind of have to wonder, why we're driving, getting rid of our oil production and our fracking and all that stuff. Of course, that's important for us, and we've got a great governor that's going to work to do what they can to help us in that area. Okay. And then this is our last slide here. Again, this doesn't impact, so corporate tax rates dropped to a flat 21%. They're thinking about raising that to 28%. Again, that impacts that impacts your corporations, that they'll just pass that down to their products and increase their products. Go back up to there. What was that last one? Oh, and then the minimum wage of 15, which would be really, it'd be really great for those people making 15 that are making maybe only $10 or $12 an hour. But that's really hard. It's really hard on a business, and you want to hire a high school student, or you want to hire a college student, and they're not, they're still learning how to work and how to do things, and yet you're having to pay them at 15. So it's a little tough on businesses, although great on the individual. So we'll see what they do in that area. Okay, that wrapped us up. Do you have any questions? I didn't see that in the write-up, but it could be in there. We don't really like to look at thoughts because they change so much, and by the time the actual law comes, then you get write-ups that aren't correct. So we thought this was important because there were so many changes to be thinking about the future and just kind of what is happening. And there is the possibility when you have a government that has control of the House and 50% control, really close to control of the Senate, their chances of getting something passed through is pretty high. So I've never done this before, given the thoughts, but there's a good chance. Now they're going to go in there and talk and figure it out, but tax law has to be, it can't be done by executive order. It actually has to be done by passing of Congress and then the president signing the bill into law. Okay, you want to?
In closing, again, this is a lot of stuff, guys. It's scary. It can be scary to run a business, but you're not alone. Again, just pick up the phone and call somebody, ask somebody, shoot an email. Great resources with the Chamber of Commerce here, which is why we do this. So we're here for you. Good job. Yep. Thanks. Back to Laura.